Welcome back, traders. This is Sandra with Trading Made Simple. Coach Paulo coming on to give you this morning's market analysis. Interested in trade automation as well as other services? Check out our links below.
And let's start with today's live session. So inflation data actually come out. Let me actually show you here the data. One second. All right. So as we can see at 8:30 in the morning today, Tuesday, January 14, we had both core PPI month to month and also PPI inflation month to month. Both came cooler than expected, and the market is initially having a bounce here. We have both dropped actually 0.2 is the actual level compared to the forecast, which is actually the preview. So yes, we have seen a very small, basically cents decline here in both PPI month to month and PPI here, the core one. Tomorrow we do have CPI, and CPI year to year. And then we have retail sales here on Thursday. All right, so the market is initially having a bounce. From a fundamental perspective, this would be good news for the markets. Initially, that would mean continuation of the pre-market bounce we're seeing. But now let's actually go to the chart and see what we have. All right, so in the chart, this is what we have. We still have the head and shoulders reversal we actually noticed yesterday. So here, this is the FOMC minutes pullback here on the FOMC from December. And we have not yet actually able to break above that level. So this remains a downtrend. For the head and shoulders, potential head and shoulders reversal, we have left shoulder, neckline, head, second neckline, and right shoulder here. So I would like to actually highlight this, and as this would be important. Usually when patterns are confirmed and then they get invalidated, that serves as a trap, right? Either a bull trap or a bear trap. You show a pattern, traders, investors take a direction following that pattern, but then at the next day it gets invalidated, right? And then the traders or investors are trapped, and you usually see a sharp reversal in the opposite direction, right? That actually happened here on January 2nd. This was still the potential head and shoulders reversal. We were going low, boom. On that trading day, Thursday, January the 2nd, we actually broke below the neckline. And when we were here, this was currently a head and shoulders reversal. But then what happened? We were not able to actually close below that level. In fact, market actually bounced. And the next day, we saw that sharp reversal that happened here. This is not the same story on this breakdown, because this is the daily time frame for the S&P 500, and we actually had that closing on Friday. We actually closed below the breakdown. Here we can see the daily candlestick. On Monday, we had a strong bounce from the support trend line we actually were checking out yesterday. Unfortunately, we were able to take a nice trades here. We bought SPY here on the bottom. We had a nice bounce. But yesterday we did not close above the pattern. So that's already 2 trading days trading below the head and shoulders reversal. So that pattern is valid into today. In today's trading session, we are seeing here this bounce on the PPI data, but we have not yet invalidated the pattern. We are actually retesting the neckline breakdown. So if we would like to remain objective, right? If we would like to remain objective and trade what we see, this is actually looking like a good short. Despite the cooler inflation data, despite the cooler PPA data, this is kind of looking like a potential good short. So as shared on our trade plan here in this morning, I'm actually open to shorting here. If we actually break above 5,860, no, this pattern would become invalidated. This would have been a bear trap, and we would be continuing this recovery to resistance somewhere around 5,950. That would be another 100 point move for the S&P 500, 10-point move for SPY. But if we actually reject here, especially if we break below 5,830, that would look extremely bearish, and we would be continuing lower. When we go to the weekly time frame here, we still are trading inside our 2024 pattern. We have been following this chart very closely. We're still on above our two super macro patterns. The first pattern would be what I like to call the COVID bull market, goes all the way to the lows on COVID, validated through 2022, 2023 corrections, and we continue higher. So additional to that, we also have the 2024 bull market, and let me zoom in here. So while we remain in the 2024 bull market, yes, we can call it 2024 into 2025 bull market. Yesterday, we noticed how we were opening here. It was basically all do or die at this level. Market was able to bounce at 5,870. But, however, of course, we can also see the inverse head and shoulders here, right? It's the same chart. So the only thing is, on the daily time frame, we got this. So could this head and shoulders on the daily time frame be an early signal that we're actually ready to break the 2024 bull market trend line and possibly head into a stock market correction or even retest the COVID trend line here? So a potential 10% drop stock market correction will take us somewhere here to 5,400. If we would be retesting the market on this support trend line, that would already be kind of 20% drop. That's already a bear market. I don't do predictions. I only do reactions. And of course, we cannot just all of a sudden predict a potential bear market. But if we break this 2024 structure, no, that would look like 2025 would not follow the bullish momentum, at least on the first weeks or even the first 3 months. So those are the levels to watch on the S&P 500. It's all about 5,860. When we go here to SPY, the pattern is not that appreciated as we do got this going on, but the breakdown would be here. Breakdown would be here. Let me draw it. 1 second. All right. Breakdown would be here. It was respected here. Here it kind of doesn't seem like that. Just, I would view this as a mechanical. The market, a difference from the SPX. Here, just the candle closed at a different level. So we can still use that as validation. Then we survived here and now we broke below it. So we can see on SPY, we are actually right here as well. We're still rejecting. On the 4-hour chart, you can view it, but forget about this invalidation here, all right? That only happens on the SPY 4-hour. So we kind of still there. Let's add this one to don't remember to also have a visual representation on SPY. So this is the level we're going to be watching at. So for the DIA here, and let's go quickly, as the market is about to open, and there might be a potential trading setups for both swing trades or day trades as well. So for the Dow Jones, we bounced from our support yesterday, but we are now at resistance here on dark pool. 425 to 426 scenario remains bearish below resistance range. Breaking above 426 would be early bullish signals for the market. What do we have here on the Qs? Same scenario. We bounce from support. Qs do have a lot of dark pool levels here working as resistance. Most important one would be the biggest at 515. While we remain 515, I know it's a bit far, I would remain at least risk off or cautious here on the market. Breaking above 515 would be bullish. Breaking below 508, top of the bottom range, would be a clear bearish signal for a potential retest of lows or even break lower. What do we have on the VIX? VIX is looking like a bullish breakout. We are trading above our support trend line. Then we did have a resistance. We broke above it. We had one retest, higher high, validated. Now we're here at the second retest. Confirmation for the VIX at 18.50. While above 18.50, I would be careful. This could still be a retest of support here for the VIX. That would be bearish. Breaking below 18.50, this setup would become invalidated. Now let's go super quick here with big tech. All right, so Microsoft is also looking bearish because we actually broke below our support trend line. Let me zoom in here so you can see we're not cutting any candlestick buddies, right? Okay, we're not cutting any candlestick buddies. So that is where we actually start. We had 1, 2, 3. That's a total 4 validations. We broke below it and now we're retesting it as resistance, actually rejecting. So is this the retest of broken down support as resistance? Could be confirmation for Microsoft 422. We also have dark pool. Below 422, bearish, above bullish. What do we have for Apple? Apple also lost support trend line. Very important support trend line, goes all the way back to August. Confirmation for Apple 239, bearish below it, bullish above it. For Nvidia, we have the same. We broke support, now resistance range 136, 138, 139. I'm sorry, bearish below it, bullish above 139. Tesla, it's actually managing to bounce. Bulls want to double bottom. Still, bears wants to short at resistance. Resistance goes from 426 to biggest dark pool at 435. Below resistance, this is still a downtrend for Tesla despite the powerful bounce. Support located at 395. Meta, I'm skipping it. On Amazon, I like this one. Potential double top. Yes, I know we are currently invalidating it. But if for some reason we actually reject, there would be a very good short setup breaking below 219. So right now we're 220.50. If we open the market and then we lose this, we reject here, that would be a double top here for Amazon. First neckline and second. And Google, let's go super quick. The same, bears are trying to scare here with a potential double top. Neckline would be at 188. We got resistance, which got biggest dark pool at 193. So breaking above 194 would be bullish, while below 194, bearish. Breaking below 188, very bearish. That would be double top. So now let's see which are the levels we're going to integrate into our charts. I'm going to be looking at 608.33 here for the cues. Let me also, 1 second, open here on my mobile and optimize my screens. Inflation data already took the charts far from my screen. 1 second. One minute. Optimizing my screen here. 1 second. Market is about to open. That is the level we're going to be checking here on the cues. One minute, it's lagging here, my cell phone. Okay, let's go. All right, perfect. Okay, so that would be the level we're going to be watching on the cues. Now let's see if we can set one for SPY. SPY does have one here. Let me 1 second delete this one. It's 584.79. 584.79. 584.79. All right, we're basically here. All right, so market open, and this is what we have. So is this a short setup here? Let's see. Good morning, everyone. Good morning, AC Hercules. So, yep, we continue kind of rejecting here. Let's view this one on the daily. All right, it's going to be important too. Yep, we still are rejecting here the neckline breakdown. I'm going to be patient. I'm not just blindly jumping into trades today. It's an inflation day. There will be plenty of trading opportunities. So let's see. Yep, we continue rejecting here. What do we have? QQQ below dark pool. SPY as well below dark pool and neckline. Neckline would be the white one. Good morning, Kaharmal. We got here Dow Jones rejecting. Jesus, everyone is rejecting. All right, so is this a short? Let's see. Okay, so first thing I'm going to actually do here is check the daily market net flow, and then let me actually check what potential trade setups we have. But actually, I'm sorry, let me correct myself. Let me type the potential alert here. So I already have it typed in case we want to execute it. We execute it super, super fast. So I would be looking at SPXS shares at 638. So for shorts, I would be looking at potential strike. Let's see. I would be looking at same day expiration, SPY puts here. And for that, I would be looking maybe at 5.7. Let's see, 1 second. Let's see which would be here an ideal strike price for some potential shorts for today. So 580, 580, 579. Let's see, how much are the 580 puts right now? 0.7. All right, I think we can go with 579. Let's see, 579. Those are 0.6. Yes, those look a bit better. 579. Not taking them yet. I'll be sure to be clear if I took them, and I will also, of course, share the trade setup. So those SPY 579 are somewhere around 0.6. All right, we already got it typed, so we can execute it fast if that is going to be the case. So yep, we continue rejecting here. And there it is. Do we have a level here for the Dow Jones? Yes, of course we have. Perfect. Biggest dark pool. That's great. 425.12. So this one, 425.12. All right, so basically these are the levels to watch. That's good because we have dark pool right here. That's going to give us answers, early answers. Qs want to recover here. This is a flag pattern. I don't usually do this, but let's actually add this on the daily. So this is what the Qs want to do here. It's a flag pattern still. Let's see if we can see the breakout. So do we also have something like this here for SPY or not? No, we don't. Too forced. And how big is 584 on the dark pool? Let me see 1 second. That's very important as well. I know it's not the biggest because I don't have it labeled as the biggest, right? Where is the biggest? Biggest is 587. Yep. Let me show it to you. So it's not the biggest. The biggest, it's located at 587. It's this one. Still, that's very important to add this one. All right, so this is what we got. QQQ back here at resistance. And now let's definitely check net flow. So first thing I'm going to do is market net flow on the daily time frame. I know it's only been 5 minutes here. Okay, first 5 minutes looking bullish. Now let me see on the 3-day time frame. I always like to compare daily to 3-day to 5-day so we can all see how the flow has been behaving the past days. All right, so on the 3-day time frame, what is it that we have? On the 3-day time frame, okay. 3-day time frame here remains bearish, despite we are actually seeing some bullish flow coming in, still on the negative zone. So it's not looking like the bulls were buying the dip on Friday and yesterday. And today, at least not yet. This is looking bearish here. Now let's compare it to the 5-day time frame. So 5-day time frame is looking bullish. And why is it looking bullish despite it being here at break even? Well, it's looking bullish because that data comes from January the 7th and it's break even. And check what the market did January 7th. Massive, massive, massive pullback, but somehow the bullish flow is break even with the bearish flow. So was there bearish volume here? No, not yet. I mean, no, right? It's quite interesting to see how the flow here is neutral. when we had such an important pullback. So is this a bear trap? Could be, but I would like to break 5,860, 70. If we break here, this would be a very good long position for swing trades here, because we would be invalidating this pattern, number one. Number two, 5-day time frame net flow is kind of telling us, hey, despite this being a powerful pullback, there was not much bearish flow. Yes, on that 3-day time frame, we don't see the bullish flow appearing yet, but there has not been much bearish flow on this pullback. So who was shorting the market? Was it big money? Was it institutional money? Let's see. Still, SPY is kind of surviving here.